If banks stopped charging interest, the financial system would undergo a massive transformation. Loans, mortgages, and credit systems would need an entirely new model, fundamentally changing how people borrow and invest money. Alternative profit models for banks. Without interest, banks would have to find new ways to make money. They might charge higher service fees, require equity stakes in businesses, or operate on profit-sharing models where they earn a percentage of a borrower's income. Impact on loans and mortgages. Getting a loan would become more challenging. Banks would likely impose stricter requirements, such as higher credit scores or collateral. Mortgage terms would shift, possibly favoring rent-to-own schemes or profit-sharing homeownership. Slower economic growth. Interest rates help fuel economic expansion by encouraging businesses to borrow and invest. Without interest, economic growth could slow, as companies might struggle to secure funding, leading to reduced innovation and job creation. Debt-free societies and consumer behavior. Without interest, personal debt levels might decrease. People would likely be more cautious with borrowing, leading to a culture of saving rather than spending. However, this could reduce overall consumer demand, impacting industries that rely on credit purchases. Changes in investment strategies. Interest-bearing savings accounts and bonds would disappear, forcing investors to explore alternative options like stocks, commodities, or real estate. Banking customers might also see fewer incentives to keep their money in traditional banks. Effects on inflation and currency value. Interest rates help control inflation by regulating borrowing and spending. Without them, central banks might struggle to manage currency stability, leading to unpredictable price fluctuations and economic volatility. Rise of Islamic banking and ethical finance. Islamic banking, which already operates without interest by using profit-sharing and ethical financing models, could become a mainstream alternative. This system prioritizes fair financial practices but may not be as scalable in a globalized economy. Government and public finance challenges. Governments rely on interest-based bonds to fund infrastructure and social programs. Without interest, they would need new revenue models, such as higher taxes or direct public investment, which could shift financial burdens onto taxpayers. A new economic landscape. Eliminating interest would completely redefine banking, investment, and economic structures. While it could create a more debt-conscious society, it would also present challenges in maintaining economic stability, requiring innovative financial solutions to sustain growth.